Good morning, ladies and gentlemen, and welcome to today's Employer Forum for the year 2023. I will be your host for today's session. My name is Bumi Oyeton, and I head the Private Client Services team at Stanbic IBTC Pension Managers Limited. We are so excited to have you join us today because we believe that today's session will bring a lot of value to you as a staff of a company and also as an employer, generally speaking, because we will tackle so many different issues that we believe you have probably been thinking about or just wanted to know a bit more as to how to deal with those issues as they come up from your staff. So we have tagged today's session Pension Mastery because we want you to be a master in everything pension. Thank you once again for joining us. We're so glad to have you. And yes, please, we would like to ask that as we go on into the session, please use the Q&A section to drop your questions, your comments, anything you are thinking about or anything that you hear over the course of today's session that you need a bit of clarity on, anything whatsoever. Please go into the Q&A section and type in those questions, and you'll have one of our handful of professionals, on the back behind the scenes who will answer all those questions. We will also have a special slot for questions and answers as well towards the end, so that we'll pick up any questions that have not been answered so that we can address those questions. Thank you so much for joining us once again. And this is just to show you the content of today's session. And without further ado, I will introduce the Chief Executive of Stanbic IBTC Pension Managers Limited, Olumide Oyeton, to give us his opening remark. Olumide, over to you.
Thank you very much, and good morning, distinguished ladies and gentlemen. Welcome to the Stanbic IBTC Pension Managers Employers Forum 2023. It is a pleasure to see such a diverse representation of companies gathered here today, virtually, united in our shared objective and aligned with this year's theme, Pension Mastery, supporting employees in their journey to retire well. Retirement is a critical phase of life, as we all know, and we must support our employees in their journey towards a secure retirement. Not only does this contribute to their well-being, but it also fosters the growth of your organization. Research has consistently shown that a comfortable retirement is linked to higher employee satisfaction, productivity, and retention. By providing retirement benefit packages that cater to the specific needs of your employees, you create an environment that attracts top talent. Simultaneously, you motivate your employees to remain dedicated and focused on their jobs, knowing they can rely on a secure and well-planned retirement. This event's primary purpose is to provide insights on how you can motivate your workforce to be more involved in the contributory pension scheme and help them achieve the post-work financial independence they deserve. We will share useful tips on relevant updates in the pension industry, such as the much talked about pension-backed mortgage, transfer window, and revised retirement and terminal benefits regulation. We will provide insights on how to manage pension remittances for your employees and deliver step-by-step guides on the benefit application processes, including robust information on documentation required to onboard employees, as well as assist your employees access their pension benefits at retirement. It is essential to emphasize that as employers, you play a crucial role in contributing to your employees' retirement savings. Retirement planning can seem daunting for employees in an ever-changing economic and regulatory landscape. Therefore, as employers, we must encourage our people to start planning early and equip them with the necessary resources and tools to achieve their goals. We are here to support this vision, and our team of pension experts will be available to provide guidance and support for your employees' retirement plans. Please participate actively in today's forum and leverage our expert resources to glean as much information as would be required to cater to the unique needs of your employees. We look forward to fostering collaboration and continuing this conversation. Your employees deserve a secure future. We are proud to be a vital player in ensuring that they retire happily and well. Welcome once again as we anticipate impactful and productive deliberations. Thank you once again, ladies and gentlemen. Over to you, Bumi.
Thank you very much, Olumide, for that wonderful opening remark. And without further ado, we are going to get into today's session. And taking us into today's session formally is Kenneth Omeogu. He is the head of business development at Stanbic IBTC Pension Managers. Kenneth, over to you.
All right. Thank you very much, Bumi, and good morning to you, our esteemed client. Bumi has already done the introduction. My name is Kenneth Omeogu, and I head the Business Development Department of Stanbic IBTC Pension Managers Limited. So I'll be taking us through some of the big updates on what's happening in the industry and also the pension journey so far. And of course, I want to use this opportunity to welcome you, our employer or our client representatives, at different employer locations across the country. As the presentation is, going on or ongoing, I would like to encourage you, at wherever you are, to go to the Q&A segment of this platform and key in your questions. We'll encourage you to type in questions, comment, and then we have our support guys at the background to attend to every question or every comment you have regarding how to manage or administer pension duties for our clients at your location. So let's start with the journey so far. And of course, you agree with me that the contributory pension scheme actually started, with the PRA Act 2004, which was reviewed in June 2014 with these few amendments and of course, changes in the minimum contribution increased from 7.5% for both parties, that is the employee and the employer, to 8% and 10% for them respectively. Minimum number of staff for any employer to participate, any employer in the country to participate in the CPS, was reduced from 5 to 3 employees. So once you have 3 employees and you own an organization, it means that you can participate in the scheme. Of course, the basis for computing contribution, that's the monthly contribution, was redefined, to total emolument, not lower than the sum of basic salary, housing, and transport allowance. Waiting period for access in the event of loss of job, for those who are below 50 years, was reduced from 6 months to 4 months. And it's interesting how the membership and the size of funds in the CPS has increased within this period. So in June 2014, it was 6.19 million subscriber, and now we have over 10 million subscribers in the scheme, as at the last industry published report on 28 February 2023, with a total asset of over 15.5 trillion naira at the same period. So the industry is growing, and of course there are huge opportunities. So for us in Stanbic IBTC, for you to understand us as a business, what has our journey been so far? We were incorporated on 19th May 2004, and we are a subsidiary of the Stanbic IBTC Holding, a member of Standard Bank Group, with a shareholder funds in excess of 68 billion naira unimpaired by losses. And if you recall, the minimum capital requirement for PENCOM is 1 billion naira, and we are way above this value, showing that as a business and as a company interested in managing pension for employees and then, I mean, for those in formal and informal sector, we are interested in ensuring that your pension is safe and then solid with us. In Nigeria, we are the largest PFA, as you may know, with over 2 million RSA holders and assets under management over 5 trillion naira as at 28 February published report by the regulators. And we serve and administer 75 approved employee scheme with a total assets of over 350 billion. So if you are listening to us and then you want to kickstart an approved scheme, of course we are the place to go to, showing that we are solid, we're strong, and then we are dealing this with major multinationals and businesses in Nigeria. In terms of payment of pension to retirees, we paid over 69 retirees going so far. So let's look at the industry updates, what has been happening in the industry. Of course, there have been many changes based on several guidelines, that have been playing out, and most of you listening to me have seen some of these changes. And of course, the one to talk about is the online verification and enrollment for retirees that went live on 1st of September 2021. Before now, we used to have our retirees visit different locations assigned to them at different regions or zones in Nigeria to do their physical verification. That's people who are nearing retirement, prospective retirees who are nearing retirement in the federal government treasury funded ministry, departments and agencies. But right now, this whole thing has changed and it's being done online. Of course, prospective retirees are required, to deal their data recapture before the enrollment. The introduction of the non-interest RSA fund, which is a Sharia compliance fund, came on board in 2021, and it's open for all RSA holders who are willing to invest in equity form of investment as against the regular conventional interest-based financial instruments in the pension fund. Of course, more changes had happened within the spaces, and some of them include, next slide please. Some of them include the revised regulation on the administration of retirement and terminal benefits, which was introduced on 25th April 2022. And here are some of the highlights. Computation of en bloc would be made where the computed monthly payment. So of course, there's a calculator that does the monthly payment, and once it's less than 1/3 minimum wage of 10,000 naira, the individual will be paid en bloc. That's the total amount in their balance once their monthly payment is within within 1/3 minimum wage. Arrears payment has now been restricted to 6 months for those in private sector. For public sector retirees, it's limited within the date of retirement and the dates accrued rights payments or outstanding contributions were made. Of course, there's the pension enhancement calculator, which now has been introduced, where retirees experience over 5% growth, then in their RSA balance, an enhancement will be dealt. The pension back mortgage is the US baby in the house, one of the US babies in the house, which was introduced in September 2022. And this regulation here or guideline here provides house ownership for RSA holders who are participating in the scheme. What it means is that you can use some part of your balances to access mortgage or to pay as equity contribution for mortgage. And this is open for people, active RSA holders who are in the fund 1, 2, 3, or active fund 4, or even the micro pension contributors as well. People who can participate here are people who have contributed consistently, cumulatively for a period of 5 years. And there are also people who are exempted, the retirees, or those who have, 3 years to retirement. Of course, married people can combine their funds together and pay down as and draw down for equity contribution to access mortgage. So we believe that we are speaking to a lot of employee representatives across the country, and we want to use this opportunity to speak to you on burning areas or focus areas where we need your support. And some of them are listed right here on the screen. So we have taken 3 focus areas and we want to emphasize on it. So if you are listening to me and you've not heard any other thing, this is probably where I would want you to look at and see how you can engage dedicated relationship managers. And of course, they will come to you and engage you on how we'll resolve some of these burning issues. So the guideline, there was a revised guideline in terms of registration, RSA registration in June 2019, and it requires and it grants PFAs to a 6-month moratorium period to obtain documents after clients who have been registered after this period, to complete. So of course we have some people who have completed theirs and some that are still pending. So we expect that the dedicated RMs across your various organizations would contact you, meet you to see how you can help us deal with this. And one of the burning issues here, employer letter. So we crave your indulgence to help us resolve this as they come. Seamless pension contribution is also key, and one of our priorities is to ensure that we demystify the different pain points of uncredited contributions. As we move along this presentation, my colleagues will speak in more details, to this, and would like to of course have conversations with you outside the space to resolve these uncredited contributions as may be required. Of course, your RMs are there to assist. Then in terms of clients' engagement, as your financial partner, we are resolved in and committed to deploying some of these engagement tools that will help your employees throughout their pension journey. And some of them are Financial Fitness Academy, Retire Well session, even pre-retirement seminars for those nearing retirement, just to equip them and engage them and provide them with relevant information they need as they move towards life after work. And of course, one-on-one engagement. We think that pension engagement is key, and of course we can have one-on-one engagement and help people to achieve better retirement. All right. How to reach us? And this is where I'll be ending before I hand over to the MC of today. So we have various service channels, as you can see on the screen. Of course, with your dedicated relationship managers, you can contact us or reach us wherever you need any solutions or any pending need. Our dedicated relationship managers attached to your companies are available to assist. Of course, the live chats via our websites, we have representatives to attend to you. Our mobile app is available to attend to most of your pension needs. Our mobile app, are equipped, with solutions that could assist most of the burning issues. In fact, majority of requests at our physical offices can be dealt via our mobile app. So we want to encourage you to tell your employees to download the Stanbic IBTC mobile app. They can reset their password by themselves and they can enjoy the majority of the features that the app has to offer. You can reach us via our website, multilingual contact center, and of course the short code services. There are other ways you can reach us. Send us an email to pensionsolutions@stanbicibtcpension.com. Of course, our mobile offices are available, and if you want us to bring them to your office, that's what is there for. We can move our office right at your office, physical office locations, to attend to the needs of your employees, and of course our various office locations nationwide, and our social media platforms are available as well, for you and your employees. So at this moment, I hope I was able to, add value or provide insights as to changes in the industry, and then how you can reach us. So I'll be handing over to my MC, or our MC of the day, Bumi Oyeto. Olubimi, over to you, please. Thank you.
Thank you very much, Ken, for giving us the industry updates and talking us through the pension industry from past to present, and then where we are going, which is the future. And just speaking to our employers, he mentioned some very wonderful nuggets that I hope you paid attention to. Things like, were you aware that there was something called pension enhancement for retirees when they start getting their pension? Were you aware that arrears payments is now just limited to 6 months maximum? These are just some of the wonderful nuggets that he shared with us. So now we're going to move to the second part, which is to talk about how you make your remittances, how money comes in, where it goes, and sort of the process flow. And to get us into that session, I will call on my colleague, Adetola Adewoye, who is the head of Contribution and Collections Department, to show us the way. Adetola, over to you.
Thank you very much. Thank you, Bumi, for the introduction. Good morning, valued employers on the call. Thank you so much for joining us for this forum. My colleague Kenneth has provided some background as to our journey up until this point, and I think it's very important, really. As an industry, we've been partnering together for about 2 decades now, and by next year, we'll be clocking 20 years. So we've come a long way, and we have evolved. I'll be speaking to contributions management process, how we manage our remittances, and how we handle schedules to make sure that the retirement savings accounts of our customers are credited on time. It's very important, because if we don't handle contributions well, then we can't be talking about administration of the funds. We can't be talking about access to benefits. So it just goes to show how important this is, the criticality of your role as employers, and how sensitive it is to the success of the contributory pension scheme. So I'll quickly talk about our responsibilities as stakeholders of this contribution remittance process. We have the employees, who are responsible for ensuring that they register with a pension fund administrator of their choice, and that they advise employers with the details of their retirement savings account. When that is done, they are expected to inform the employers, who will take the details and apply this for the monthly remittance of their pension contributions. And that is the critical role of the employers. And I'm glad that at every point in time, we seek sessions like this to talk about our rules and how we can deepen our collaboration. So employers are expected to make remittance on a monthly basis. And when that is done, it is received by the custodian alongside with the corresponding schedules for the payment. And when this is confirmed, the custodian would definitely advise the pension fund administrators, who is then expected to ensure the retirement savings accounts of the customers are credited promptly. Of course, we have the role of the regulator, which is our regulator, National Pension Commission, who provides oversight to ensure that all actors within the industry plays their role, and we ensure that the contributory pension scheme is working as expected. So those are looking at the responsibilities of the various players as far as the contribution management is concerned. In terms of how we progress or how we undo contributions, of course, the flow is just the way I've described it. It starts with the employee to the employer, and then to the custodian, down to the PFA, and then the report that is rendered to PENCOM to provide oversight on. And speaking about contributions, really, we can talk about our responsibilities, but it's also good to also look at what are the benefits of doing it right for each of the stakeholders. We have employees, and the benefit to employees is that when your details are properly captured and remittances are processed, you receive contributions on time. Many times, employees check their RSA accounts. Some will complain, oh, my employer has not remitted. Some will see their contributions remitted promptly and regularly into their accounts, and they are happy. So as employers, we believe that you don't want to carry a workforce that is unhappy, because that will also be unproductive for your business. So it's in this that we employ you to make sure that employees do their bit in terms of providing accurate details that will enable us credit their retirement savings account on time. And for employers, processing of compliance certificate becomes easy when this thing is done as it should be done. And also complying with the regulation. I believe we are all corporate citizens, and we want to ensure that we are not in breach of the law. For custodians, of course, and us as PFAs, our ultimate goal is to make sure that we render excellent services. And we can only do this by ensuring that we partner with you to give value to our customers. And like I mentioned, the regulator always gets a report, and they are always supervising to make sure that everyone does their bit as it should be. And moving on from that, speaking to contributions, remittance, and schedule management, I think it's important to quickly look at the schedule. So employers make payments. How regular and how consistent and how accurate are the schedules that we provide for this payment that is processed? It is very, very vital, because the objective of the act is not just for payments. I always emphasize this, because sometimes we pay and then we think we have done what is required. No, we have not. And we are also not handling the interest of our clients, who are your employees, as we should. Ultimate goal is to make sure that their retirement savings account is credited. So when payment is made, it is important that the schedule that comes with it is clean and fit for purpose. And some of the details that we must ensure that we capture on the schedule is the name of the pension fund administrator to which the employee belongs, the period for the contribution that is being remitted, the name of the employee, so surname, first name, middle name, the RSA PIN, which is like a bank account, so it's a unique identifier for each employee. We must make sure that is provided. The contribution also has to be shown on the schedule in the form and manner that is required by law. What is the employee portion? What is the employer portion? What is the voluntary contribution portion? And what is the total amount? Now, the total on the schedule must always correspond with the payment that has been made. Ultimately, the objective is to ensure that we credit retirement savings account promptly. And when this is achieved, clients get a notification. So we send SMS to notify clients that, oh, your employer has remitted and your RSA has been credited as expected. Where there are discrepancies, of course, we get back to employer to say, oh, we observe these discrepancies and we need to resolve such. So that's basically the run through of how this process is expected to run. And when we do this, if we do it right, of course, we would achieve the objective that we set out to achieve. The major issue that is a stumbling block on this process has to do with issue of uncredited contributions. And the reason why we have uncredited contributions are in different folds. We have issue of payments without schedule. So employer has made payment and the corresponding schedule for that payment is yet to be provided. Of course, nothing will happen to such payment, and we must make sure that that is prevented as much as possible. When payments are made, it is expected that corresponding schedules are provided. And I'll speak more on how we can navigate these issues that I'm talking about. Another issue that we encounter has to do with schedules with issue. So payment has been made, schedule has been provided, but there are issues with the schedule. Issues like name mismatch with the schedule that has been provided, issues like total value on the schedule being more than the payment that has been made. So you make a payment of 100,000, and then when the schedule is received, it's showing 80,000, the schedule is showing 110,000. So there is no match, and that will create a back and forth that we want to prevent. Another issue that we normally see with schedule is where an hard copy is presented to the custodian and the letters are hardly readable. So if you provide that, of course, there will be a challenge with using that information to process the remittance. The last one has to do with data cleanup. So data issues, we have issues of name mismatch, issues of invalid PIN, records that don't match. And when we encounter such, of course, there will be no way that we can process remittance as quickly as we should. How can we navigate these issues and ensure that this process is seamless for our clients? I think that's important for this session. First, I talked about no schedule. How can we navigate that? There are different collection platforms, and we encourage employers to make use of those platforms. We have platforms like Epcos. Those platforms, the benefit of using them is that as payment is being made, schedules are also being provided simultaneously. So when this gets transmitted to the custodian, they are getting the two at the same time. So there's no lag of, oh, we've made payment, but schedule is in transit and all of that. That creates delays. So the use of collection platform is something that we encourage to work around the issue of schedule with issues, as in that challenge. Contributing employers. The one way to achieve that is to make sure that when we provide our schedules, they are clean. And clean schedule is all about making sure that the records are complete and corresponds with the payment that has been made. So I mentioned the issue of over or under remittance. It is when that is not corresponding with the payment that issue arises. And then when we have schedules where there are no pins, incomplete information, maybe there are names, no pin, or there are pins, no name, and all of those, it will also create a challenge. So what can we do around this is to make sure that the template, just as I've shown us earlier, is adopted, and then we use that in making our remittance processes. Because when we do that and all the information is provided, it will help us to achieve seamless processing. Another thing that I mentioned is where records are provided without PIN or invalid PIN. In such instances, there is still nothing the PFA can do to credit because those information are vital. How can we work around this? The regulation empowers the employer to request PFAs to open a nominal account where an employee is yet to open a retirement savings account. And that gives a window of 6 months within which the employee is expected to open that account. And when that is done, the contributions to the nominal account will be transferred to the validly opened RSA account. That is just to make sure that there are no gaps or instances of incomplete records being supplied by the employer. Also, the character length is uniform and standard across the industry. It's 15 character length for RSA PIN. So we must always look at and check that. So if it is not complete, you know, and you can quickly check with the relevant employees to confirm that the records are complete. And then the last one has to do with when we are onboarding employees. Please, let's request for welcome letters. It is given to all account holders. That welcome letters will show all the information that is required, because sometimes it is in providing that information that employers get the wrong information. But when we get the welcome letters from the employees, it will give you the actual information that you need to capture in your database. Issue of name mismatch is something we talk about a lot. People make changes to their names, and when that is done, it is important that they update their records with the PFA and also do the same with the employer, because at every point in time that remittances are made, it is important that the records match. Moving on, in terms of our collaboration and what I've been talking about, there is only one possible outcome, and that has to do with us working to ensure that contributions are remitted and credited promptly, because that's the only way that contributors can realize the benefits of being part of this scheme fully. Also, as employers, just like I mentioned, it helps us to comply with the regulations. When you are obtaining your certificate of compliance, it becomes very easy to get that, and knowing that you're on the right side of the law. Finally, contributors will be able to retire well. If there is no contribution, there's no benefit, really. So if we get it right with contributions, then we can be confident that contributors will be able to access their benefits as and when due, and that will deepen the effectiveness of the industry. Not working together to achieve all of this is really not an option, because it will negate the process and negate the objective of the scheme. Our appeal, in a nutshell, is to make sure that we work together. And I've been saying that continuously because that's the only way we can tackle these areas of challenges that I've spoken about. When we work together, we can tackle those areas. We can deepen our collaboration to make the contribution management process seamless for the contributors, and we can all be happy for it as stakeholders. Thank you very much for your time and for being part of this session. I hope this has been useful to you, and let's continue to work together. Thank you. So right now, I'll hand over back to Olubome. Bumi, over to you.
Thank you very much, Tola, for unpacking that very important section for us. And for our employers, once again, if you have any questions, any comments, anything at all that you want to know more about, maybe it's what we discussed, maybe anything that Ken spoke to when it comes to the updates in the industry, and anything at all, please feel free to drop your questions, drop your comments, drop your concerns. If there's anything you just heard from Tola about how to make pension remittances, the schedules, the formats, the pins, anything at all, please feel free to drop your questions and you'll definitely get answers to them. So now we're going to go for a very quick commercial break, just for us to sit back, relax, reflect on those things we've talked about, and we'll be back in just a minute to continue with today's Employer Forum. So enjoy. Welcome back to today's Employer Forum. We hope that you are having a wonderful time so far, and you heard some very, very insightful nuggets that will make your pension journey a much smoother and pleasant one. So remember what the two things we've talked about. We've talked about the updates in the industry, where we talked to you about the pension-backed mortgage. We talked about pension enhancement. We also talked about arrears payments to retirees and the maximum that you can get if you're in the private sector, and so many other things. And then Tola spoke to us about how to make your pension remittances so that there are no issues between when payment is made and when your staff pension accounts are credited. It's very important that we follow these steps so that our staff are very happy and they don't come rushing to you and start asking, why have I not been credited? What's wrong with my pension? I'm not seeing my money. I'm not seeing my remittances. So we hope that this has sort of made things a little easier for you when it comes to making remittances of your pension for your staff. Now we'll be moving on to the next section, where we'll be speaking to how to access your pension benefits. This is probably the most important part as far as everybody is concerned when it comes to contributing to the current pension scheme. Everybody wants to know, how do I get my money? How do I get my money? Well, this is where your questions will be answered. And remember, please drop your questions in the Q&A section, and you'll get all the answers to all your questions over there. Now I'm going to hand you over to Peace Thomas Danwan. She is the head of our regional operations at Stanbic IBTC Pension Managers. Peace, over to you.
Thank you very much, Bumi, and thank you very much, everyone, for having me today. My assignment is actually a very simple one. I'm actually excited to, talk about this aspect of the pension industry, because this is where, a lot of us always want to know all of these investments that are being done. Hope I can get my money when I need it, and you're not going to ask me for an arm and a leg. I should not go and bring things from my village just because I want to access my pension benefits. But I can assure you today that after our session, we would be able to, know all of the things that we are expected to do for the retirement process. Now, We're going to look at 3 key areas. What do we need to do, or what do we need to know when preparing for retirement? What are the different withdrawal types? What are the different documentation? And then we'll round off, by looking at, an example that we do not want to happen to us when we're assessing our pension benefits. Again, I would always mention that the process can be very seamless. Should we put all of the right steps together and then follow through with them? Now, in accessing the benefit, there are 4 stages that we need to understand, and the 4 stages include the benefits submission. And at the submission stage, this is where all of the documentations that are required are put together. Now, for every application type, we've put together checklist, to guide the submission process. And once you get the submission right and all of your information is in order, we would go to what we call the review and filing stage. And this is the part where we go ahead to, look at the documents that have been put together. Are they authentic? Are they valid? Are they in alignment with the withdrawal type? And then after that is done, we go to obtain approval from our regulators. Our regulator is the National Pension Commission, and upon their approval, that's when we can, make payments. And once we get the approval, we credit the nominated bank account. Now, in preparing for retirement, there are 4 things that we always, emphasize and encourage. The first is with respect to updating the information. We always advise that the updates to the information is done, timely, such that, the date of birth, the name, surname, first name, and in many cases, middle names, they are in alignment with the National Identification Management Commission, NIMC. And that's because today, every Nigerian is required to, maintain the national identification number, and which is, the important information that everybody aligns to. So whatever information that you have on your NIN, you are expected to ensure that, it aligns with what you have registered with your with the PFA. Now, with that information, you must make sure that your date of birth, your gender, surname, first name, they all align with what you have registered. So if there's a disparity, we always advise that those corrections are done, before retirement, so that there won't be any issues with discrepancy in information, because this is one of the pitfalls, that we have seen, or the challenges that people encounter when they want to access their benefits. They put in their documentation, but because of the discrepancies, it elongates the process. Sometimes people have to go back to NIMC to correct those details, and in correcting it, the turnaround time is elongated. So we always emphasize, and we always, advise that this information is updated. For people that are yet to obtain their NIN, we encourage that, they do so that before retirement, all of that is sorted out. And then the documentation, like I rightly mentioned, we have checklists that guides the withdrawal process. So relevant documentation such as pay slips, which are required for the benefit withdrawal process. We always advise and encourage that these documents is readily available and handy immediately at exit. Now, another critical thing that usually causes some delays with the application process, which we encourage should be rightly done, is the employees exit. We always advise that whatever clearance processes that are required, they should be done and done timely, so that when the RSA holder comes forward to apply for the benefits, there won't be cases of the person still reading as an active employee in the organization's database, because it requires that we write organizations to obtain certain information such as date of birth, date of exit, and a confirmation that all the pension remittances have been done at the point of applying for the benefit. So we always advise and encourage that the employee clearance is completed as at when due. So let's quickly look at some of the withdrawal types that are very much available. People always wanting to know, can I access my benefits, and at what time am I eligible? Now, for any RSA holder who has attained the age of 50 and no longer in employment, such an individual is entitled to what we call a lump sum and program withdrawal option or the annuity option. Now, anybody that has above 550,000 naira as RSA balance can enjoy any of the two withdrawal options. We will talk in much detail the features between program withdrawal and annuity, but in the two options, what we need to talk about here is the fact that the RSA holder will get to receive a lump sum, which is calculated. We'll look at the we'll look at the computation template shortly as we progress, but there is a calculator, and the calculator will determine, how much lump sum you would receive and then how much you would get on a monthly basis. Now, for the monthly pension payment, you can receive it either on a monthly or on a quarterly basis. And in the two options, you will get to receive the lump sum and the monthly payout. Now, for people that their balances are 550 and below, because the balance is not sufficient, to program them or place them on an annuity option, they get to receive the entire value as an en bloc payment. Now, sometime in 2022, the regulations for the withdrawals under the lump sum and program withdrawal or lump sum and annuity option was, revised such that any RSA holder today who is eligible for lump sum and program withdrawal or lump sum and annuity options, and after the computation of their benefits, their monthly pension is less than 1/3 of the minimum wage, such RSA holder would receive the entire balance as an en bloc payment. So such that as long as the calculation is done and the monthly pay is less than 10,000 naira, automatically that person will receive the total balance in the account. We have the 25% withdrawal option, but this is applicable to people that are less than 50 years of age and have been out of employment for up to 4 months. People often ask, can I collect 25% more than once? The answer is no, and that's because 25% is a once in a lifetime withdrawal, and we always advise and encourage, do take it when you critically do need it. So you don't have to just collect it because it's there and you're eligible for it, but collect it when you actually do critically need that payment to support whatever you're trying to achieve. Now, there is a disease withdrawal type, and this withdrawal type is actually applicable for RSA holders who are no longer alive. Now, nobody prays or plans for death, but in the event that it happens, the RSA balance is paid to the legal beneficiaries. Now, the legal beneficiaries in this instance refers to, where a letter of administration has been obtained by the individuals that are left behind, or a will that has been admitted to probate, which the RSA holder did while alive. So these are the different withdrawal types. But let's quickly talk about the different features of lump sum and program withdrawal, because this is one interesting area that a lot of people often ask questions about. Now, program withdrawal and annuity, one of the things that we need to look at is the fact that anybody opting for program withdrawal, once they opt for program withdrawal at the first withdrawal stage, they need to access what we call the increased monthly pension. It means that whatever value that has been calculated for you, you would get to see increments. So as long as your RSA is still being invested, you would be experiencing, growth in your pension payments. But, in annuity, the case is not the same, because whatever value has been calculated at the initial stage, that's the amount that you would receive, all through the period until, death occurs. Now, another thing about it is the fact that, we have spoken about the disease payment under the withdrawal program withdrawal option. At any point in time that death occurs, the total balance is paid out to the legal beneficiaries. However, in the case of annuity, there's something that is called the guarantee period. It's usually for 10 years. Some insurance companies will target or cap it as 120 months, but it's one and the same, it's 10 years. Now, what it means is that after the retiree dies, the residual balance goes back to the insurance company. So we always advise that people should find out and read more about annuity before they go into that option. Now, once you've opted for program withdrawal, you would have to stay for 12 months, which is 1 year, before you can make a switch to annuity. And the thing about it is that once you make that switch to annuity, you are not able to come back to program withdrawal. So it's always important that careful reviews are done before the decision is made, so that you don't go into something, or people don't go into something that you do not understand. Another thing about the two that it's important that we know is the fact that some people always, people that have opted for annuity often engage Pencom asking questions about the agreement they have entered. Now it's important to note that insurance companies are overseen or supervised by NICOM, whereas for program withdrawal option, it's Pencom that regulates and oversees that. So it's always important that people understand that once you've gone to annuity, you're not able to come back to program withdrawal, and it's NICOM that you would have to engage periodically. Now, for people that are opting for program withdrawal, one critical thing to note is the fact that we'll continue to invest your remaining balance, and that's where you would get the incremental pension from. But in the case of annuity, all of the investments, if investments are done, the increase of the accrued interest goes back to the insurance company. Now, one critical thing that we need to note is the fact that there are some people that do voluntary contributions. This is aside the mandatory, contributions that are being done. Voluntary contribution actually is done by RSA holders to support the decisions that they want to make for retirement. So those voluntary contributions is whatever amount that they have decided to put in. And in accessing the benefits, there are two options that are available. People that are less than 50 years of age, they're able to collect 50% of the contributions after 2 years. Now, the remaining 50% that they do not access at that time is put into their mandatory RSA account, so that at retirement it will beef up the balance that will be used for the calculation of their pension benefit. Now, any withdrawal that is done in less than 5 years, the accrued interest, that's the interest portion, would be subject to tax. Now, people on program withdrawal or annuity, that gain another employment after they have started off the pension plan or the pension payments, whatever employment that they get, they're also not left out. Now, at that time, it's no longer mandatory to operate a pension account, but should they desire to continue, all of the contributions that are put together are put into voluntary contributions, which they can access at the expiration of the contract, or when the contract, terminates, or their employment ends, they would access the entire balance. Now, again, if they're accessing the balance less than 5 years, the principal value and the interest that has been accrued is subject to tax. So those are the major benefit application types that we would like you to be familiar with, so that when people ask you questions as to what they can collect and when they can collect it, we'll be able to enlighten them about the different the different withdrawal types and the different processes. Now let's quickly take a sample look at what the computation template looks like. People always ask, oh, I want to collect 50%, I want to collect more, what can I collect? Now we always advise that the calculator is designed such that it looks at what you are earning while in active employment, and make sure that it's paying you a pension benefit that is close to up to 50% of your monthly pay. That's the portion that contributes to the pension. But there are 4 critical parameters. If you're looking at the screen right now, you'll see that there are the template is up, and there are 4 portions that are highlighted in pink. Those areas includes the gender. So for men, we impute 1. For female, we impute 0. We also capture the RSA balance, which is at the time the calculation is being done. And then we see the final salary. Now, the final salary is obtained from the payslip. And this is why we said that one of the critical documentation for accessing your benefits at retirement is the payslip. Now, we would obtain the basic transport and housing emoluments from the payslip, multiply it by 12, and put it on the calculator, which we term the final salary. And then we also impute the age at retirement. Once we do this, it will give us an output that would determine what the recommended lump sum should be and what the recommended monthly drawdown is. And recall our discussion where we mentioned that once the monthly pension payment is less than 10,000 naira, which is 1/3 of the minimum wage today, the person would automatically get to receive the RSA balance as a total payout. And this is how we determine, how the competition is arrived at. So PFAs or individuals do not have the opportunity to determine what an RSA holder or retiree would get as a pension payment. Their information will determine what they are eligible to receive. Now, once all of this is done, now, there are different documentations, and we always advise that, we would never ask you to provide an arm and a leg just to be able to access your pension benefits. There are 5 critical documents which we always advise that are put together. Now, the first is the fact that, they will put in, every RSA holder who wants to access their benefits will put in an application. So there's an application form that has been designed for people to fill out, provide their information, and indicate interest indicate interest for withdrawal. And then a passport photograph is attached to it for identification purposes. A copy of the birth certificate or declaration of age is provided, and that's because you want to be sure of eligibility. People are not above 50 years of age and applying for 25% payment. A copy of the exit letter, which we also call the retirement letter, is provided, and then the bank account details for payments and a means of identification. And thankfully today the NIN serves as a means of identification. So everyone that has the NIN automatically has the means of ID. Now, for program withdrawal, people that are opting for program withdrawal annuity, it's important to note that they would have to execute an agreement. So for people opting for program withdrawal, they would execute an agreement with the PFA. People opting for annuity would execute an annuity agreement with the insurance company. One pay slip is provided within 3 months of exit, which we have emphasized over time about the withdrawal process. And then we also have for people for people that are opting for VC, all you just need to do is just provide your means of ID and fill out the form, and that's all you need to do. But in the case of deceased, a letters of administration, which has to be provided, or the will that has been admitted to probate, and evidence of death. These are the critical documentations that are needed to be provided. Now, let's quickly run through a case study. Now, in looking at this case study, it helps us to reflect on the discussions we've had today. And this is a case of an RSA holder who was approaching retirement, wanted to exit, but efforts were made to reach out to him to update his information, but he had changed his phone number. Now, in doing that, we discovered that we couldn't reach out to him. Now, when he came forward to apply for his benefit, his date of birth, was wrong. He had to spend time after exit to make the corrections done, and afterwards, that was when he could access his benefit. Now, he has spent months, having to rectify the issue with his date of birth before he could apply for his benefit. Now, what are the lessons today? The lessons are that it is important that you update your information. There's something that we call the data recapture exercise. We advise that any RSA holder who hasn't done so please do so. Now, the data recapture exercise is actually applicable to anyone who was employed or had registered the retirement savings account on or before June 2019. So it's important that that data recapture exercise is done. Get the documentation together. You can make reference to the checklist for the withdrawal types you want to apply for. Earlier in the presentation, our different channels were shared, and you can also make reference to them on our website. Get the documents put together so that you don't have any, there are no hassles when, trying to apply for the benefits. But I can assure you again, the process is very seamless. All you just need to do is that, have all your documentations in place. And most importantly and critically, your information is updated at all times. Thank you very much for having me. I will hand over again to my colleague Bumi to continue with the session. Thank you very much.
Thank you very much, Peace, for going through the benefits application process. I know that is a very, very crucial part that you anchored, because a lot of the time we always get this question: how do I get my money? How do I get my money? What do I need to do? Do I need to go to my village to go and bring my ancestors, and all sorts of questions because people are anxious and they just really want to know the answers to that question. So I hope that we've all gotten the facts with regards to how to apply for your pension benefits, what determines how much you get as your lump sum and your monthly pension going forward, the differences between program withdrawal and annuity, just to mention a few. So now we would go through some of the questions that have been posted so far. I can see the Q&A section has been buzzing all morning with all kinds of questions. It's just been fantastic. Thank you so much for all these questions. Some of them have been answered already, but what we will try and do now is to also answer a few that have either not been answered or that we need to provide more clarity on. So let's get right into some of those questions. And we'll call in on our speakers to address some of them. Okay, so we have a question here that says, what is the maximum payment on lump sum that is payable to a retiree? So we have another one that says, name mismatch, similar names and incorrect pins. How do we treat those kind of issues? I would like to know more about pension enhancements. Can you shed more light on it? Can the fund after retirement pay for lump sum, qualify for a loan? What should be done if it is discovered that unremitted funds from both the employer side and the employee side? What happens to uncredited remittances by an employer after 6 months of non-reconciliations? Okay, so to tackle some of these questions, I will call on Peace since she was our last speaker. So Peace, if you could just come on board very quickly, and I will ask these few questions, sort of take them all together. The first question is, what determines how much I will get as my lump sum when I apply for my pension? Because there's always this argument that the law says it's 50%. Everybody says that you get 50%. Why am I not getting 50%? So can you please clarify for us what governs, or how is it that a retiree gets a certain percentage as their lump sum and their monthly pension payments? And while you are speaking to that, could you also answer this question, which is, could you also just throw more light about the en bloc payment option when people apply? And I guess you could just add what is arrears payment as well as part of the questions that you will answer. So Peace, if you could take those 3 questions very quickly. What determines how much I will get as my lump sum, and why don't I get 50%? En bloc payment, what does that mean? And lastly, arrears payment, what is that all about? So Peace, are you there? Over to you.
All right, I'm here. So yes, Bumi, I'm here and I got the 3 questions, and I'm hoping that I'll be able to do justice to answering them. Now, I'll start off from the 3rd question, which is respect to arrears payment. Now, one thing about the pension payment plan is that it's our desire that immediately you retire from service, you access your pension benefits, and that's why we have sessions like this to encourage and advise what are the steps that are required, so that at every touch point everyone is enlightened about the requirements, so that there would be any reasons for any delays that would require even an arrears payment. Now, but it's important and critical to note that from the date of exit, from the date of retirement from service, now to the time the pension benefit is paid, people often refer to those periods as expecting to receive their pension benefit. But it is critical to note that for everyone that works in the private or the self-funded organizations, there is only a window of 6 months to cover for those pension payments, such that from the date you leave employment to the date you apply for your benefits, you are only entitled to monthly pension payments for not more than 6 months. So it's advisable that immediately you retire from service, put in your application, and then you start getting your monthly pension payments made. Some people, leave it out, leave the monies in the RSA account, travel, or even come back and then say they want to apply for their monies, after 1 year, after 2 years. But the regulation has clearly spelled out and made it clear for everyone to know that anyone retiring from the private sector organizations or even self-funded organizations, you are only entitled to 6 months pension arrears. Now, the other question you asked about the en bloc payments is the fact that anybody that has 550,000 naira balance, you would be able to receive the total value as an en bloc payment. So 550 and below, you get the total payout. Now, sometimes some people, often mix it up with the clarification or the updates to the regulation sometime last year, which we talked about earlier today, which is for people that have opted for program withdrawal or annuity, having balances above 550. Now, in such instances, their payments are not en bloc, and that's because their balances are already above 550,000 naira. Now, what it means is that when we do the calculation of your pension benefits, because you would have to provide all of the requirements as if you were opting for annuity or program withdrawal. But when we do the calculation and realize that your monthly pension that has been computed is less than 10,000 naira, that is when you will get all of the benefits as a total payout. So people often mix this up and call it an en bloc payment, but it's not. Yes, the payout is, termed en bloc, but you would have to go through the required process, which is provide all of the required documentation for program withdrawal or annuity. Now, I'm hoping that I've been able to clarify that for us. Now, the other question that was asked is, how do you determine the calculation, and how can I get 50% lump sum? Just like we rightly showed on the calculator, we also pointed out the areas that are highlighted in pink on the calculator. It is those parameters that determine how much you would be able to get as lump sum or monthly payout. So who determines the 50% lump sum? It is the RSA holder, and that's because of the parameters that you have for yourself: your RSA balance, your gender, your age at retirement, and your final salary, which we obtained from your payslip. All right, Bumi, I'm hoping again that I have done justice to the questions, but over to you.
Thank you very much, Peace. So while you're still on the hot seat, I'll just throw in these 2 additional questions that I have come through. The first is, where's that question? Is the monthly payout, so this is now under program withdrawal, is the monthly payout till death? And then the second question is pension enhancement. Please, what is that about? So can you please speak to those 2 things? The program withdrawal, is it payments? The monthly payments, is it for life? And pension enhancement. Thank you.
All right. So thank you very much, Bumi, for those 2 questions. So I'll go with the first one, which is pension payments for life, is it till death? Now, to clarify both. Now, program withdrawal is for life. Which we often, term, or which people often, mix up. But yes, pension payments, as long as you opted for program withdrawal, is for life. And that's because even when your RSA balance, finishes, which we do not expect, but even in the event that the RSA balance has been depleted, which has gotten to 0, we're still expected to pay the retiree, which we call the minimum pension guarantee, because you are guaranteed to be getting your pension payment even after words. Now, if you go to the other side, which is annuity, now we had, talked about earlier, and we said that annuity, there is a guaranteed period of 10 years, and in many cases, it's often termed as 120 months. Now, that guaranteed period lets us know that in the event of death, outside of the guaranteed period, and this is for people that have opted for annuity, there is no guarantee that it will get any payments afterwards. Now, even the beneficiaries, they are not, likely to get any payout after the guaranteed period. And that's why we always advise that find out, read about annuity before you execute an agreement, so that after the guaranteed period, you know what will happen to the beneficiaries, or any balance afterwards. But I can, confirm to you that for program withdrawal, the payment is for life. An event of death, right, the total payout is made to the legal beneficiaries. And in this instance, legal beneficiaries are RSA holders who have done a will that has been admitted to probate, or people that die in estates. Their legal beneficiaries will provide a letters of administration in that instance. So I hope I've been able to clarify, what we mean by payment for life and payment till death. Then the second question you talked about, which is for the pension enhancement. Now, we spoke about, when we talked about the features of program withdrawal, we said that even after you've collected your lump sum, the remaining balance is still invested and is subject to growth. So periodically, right, as the RSA account, experiences some substantial growth or interest in it, the RSA holder would, get an increased pension payment. So people that, whatever calculation we've done, if your pension is calculated at 250,000 naira, and then subsequently there increase in your RSA, so, as a result of the growth that has been experienced, you would get to receive, increased pension benefits. So would increase it from 250 to whatever value that comes. And periodically like that, I can tell you that some people have enjoyed 3 increase in their pension benefits since they started, or since the commencement of the pension enhancement. So it's something that people would get to enjoy when they opt for program withdrawal. But pension enhancement is not applicable, or it's not something that is practiced under the annuity option. All right, thank you very much, Bomi.
Thank you so much for answering those burning questions, Peace. So you heard it, ladies and gentlemen, that you will also be paid for life under program withdrawal. So don't panic when you hear that, oh, annuity pays for life. Program withdrawal is also going to do the same for you. And there is the added option of the enhancement that happens every few years, where your monthly payments that you've been getting as a retiree will even be increased at a certain point throughout your payment period. I think she said usually happens sort of every 3 to 4 years, thereabout. I know we had a recent enhancement exercise earlier this year in February. So thank you very much, Peace. Now I'm going to call on Kenneth to answer these next questions, our head of business development. And Ken, these are the questions that are being asked. The first is, can you please tell me what the process for withdrawing for a housing project? I believe this is speaking to the RSA-backed mortgage. The next question is, can you please tell me more about the voluntary contributions and how it can be assessed or even sort of contributed to? So you can speak to those 2 parts, contributing and withdrawing. And then last but not least is, how do I switch my RSA from one pension fund administrator to another? Over to you, Ken.
All right, Bumi, thank you. Please confirm that you can see me.
Yes, we can.
All right, thank you. All right, so to respond to the questions, I'll start with the first question, which is the process to assess the RSA-backed mortgage. And of course, this is what we get almost on a day-to-day basis based on our engagement with clients. And it's key that you are client representatives also understand the process. So for anyone who wants to secure a property, would first of all need to get, an offer letter from the seller of the property. So you start by searching, for the property, get an offer letter from the seller, and an endorsed statement from us, your PFA. Okay, so you get the offer letter from the seller and your statement from us. Then you would take those documents to your mortgage lender. take the property offer letter and your endorsed RSA statement to the mortgage lender. So the next thing that the mortgage lender will do, they have their own processes within. They will issue, once they are done with their processes, they will issue you a mortgage offer letter that you would forward to your PFA, to us. So you can even send soft copy to us at pensionmortgage@stanbicibtc.com. And of course, you, the applicant, you can also approach us, with your mortgage offer letter to request, for your equity contribution to be paid, to your bank. We will process the application and forward, your compliance application. The application needs to be compliant to our regulator. And once that is done, our regulator will need to, that's National Pension Commission, will need to review and approve your application, and then they will notify us. So, and once that is being done, the mortgage lender, will provide original supporting document to us, and we will do all our checks to disperse, the approved fund. And then we would, as your PFA, will notify you, the RSA holder, of the approval and the disbursement. And then if there are several engagements in terms of what we need to regularize, definitely our clients would definitely get the communication as may be required. And that is that for the process for processing mortgage. Then the second question, which speaks to how to transfer. And of course, the first approach is for DRE to be completed. So if your employer, if you are registered, perhaps from June 2019, after the revised RSA registration guideline was released, it means that you're already in the PENCOM enhanced platform and you will not need to do DRE. But if your registration was before or prior to June 2019, then it means that you will need to complete DRE with your PFA. And once that is done, we are all over the nation, and of course you can contact your dedicated relationship manager to visit your location to capture whoever that needs to be captured. We would capture the person, or you can also send us an email to pensionsolution@stanbicibtc.com, and then we will be available, to capture the individual. And then the next third question, if I'm not wrong, is about voluntary contribution. Okay, so the process for contributing voluntarily and how to access it. So it starts by explaining, of course, what voluntary contribution is, and if you need to make additional contributions in addition to the regular employer-employee contributions that are being made by your employer to enhance, your pension at retirement, or to augment your pension at retirement, there's a provision for voluntary contribution. And to start with that, different organizations, we meet different organizations, they have their own different processes at which they ask their employees to apply. So, of course, I believe I'm speaking to representatives of the different organizations. Usually it could come from the HR or the finance department. I've seen some employers use SAP. I've seen some employers use just emails or just communication to the HR, notifying them of the amount you want to be contributing on a monthly basis. That will be checked internally based on your pay, and then your finance or HR people representing you in your various organizations will start making those remittances. And of course, there are guidelines as to how to withdraw from your VCs. To just explain it in a nutshell is that the values in your account that you've contributed would have stayed for a period of 2 years, and the value accessible must be monies that have also been in your account for more than 2 years. In terms of withdrawal, they are in 2 parts. 50% is the contingent portion available for withdrawal, while the other 50% is fixed for retirement. So what do I mean by that? So if you have saved up, if you have up to 5 or let's say 10 million naira saved up for a period of 2 years, and that 10 million naira in your VC has stayed in your account for 2 years, at the point of withdrawing from it, 50% of that value will be what will be accessible for withdrawal, while the other 50% will be kept aside as a fixed portion that will be used to augment your pension at retirement. Bumi, over to you, please.
Thank you so much, Kenneth, for answering those questions. So you've heard it, ladies and gentlemen, how to apply for the RSA-backed mortgage if you want to access up to 25% of your pension balance towards acquiring your dream home via a mortgage. So now I'm going to call on Tola to answer a few burning questions that I have picked up. So Tola, thank you for joining us. The questions are, can you please, what happens to an uncredited remittance by an employer after 6 months of non-reconciliations of the remitted sum by the employer? So that seems to be a reconciliation issue. The second question is, can we upload our schedules online instead of having too many groups or individuals that keep asking for our schedules? So this is an employer that obviously is getting sort of multiple requests from different places for the schedules that will be processed for the staff of the company. Yes. And then the last is, I think this was shared on the chat room. We said, can you please share the schedule template and just sort of give a brief explanation of that remittance schedule template, how it works, the information there, what should be imputed into it, and how, so that it can go through via internet banking or transfer, so that there are no issues when those remittances are made. Over to you, Tola.
All right, thank you very much, Bumi, for those interesting questions. They are questions that are actually very important, and that's also why we're here. The first question with regards to uncredited contributions reconciliation, what happens to such contributions? Really, it's a major problem, and that is also part of why we are having this conversation. The objective is to make sure RSAs are credited, really. So that money, if you're not able to credit it to those RSAs accounts, they are unitized and sitting in an account. That account is suboptimal compared to when those funds have been uploaded into the retirement savings account of clients. And it's not tied to a particular period. So when we say what happens after 6 months, what happened after, it's not really about the timing. There are contributions that are uncredited, and if no action is taken, they're sitting there. And it's been an issue that the regulator is interested in. We are worried about it because we're not achieving the objective if the money is sitting in uncredited contributions. And that is why my emphasis is around us being more interested, is around being more passionate about ensuring that every time we make remittances, contributions are credited. I know for a certainty that when contributions are applied, and there are discrepancies, there are fallouts, the RMs engage those, the employers, applicable employers, to review those discrepancies and advise on resolutions. So our appeal is still so much around paying attention to those things, because this is the implication when we don't handle those things on time. It sits pretty idle. That's what I would describe it as, because it's very suboptimal, like I said, somewhere in a suspense account. So the earlier we work together to review where it is applicable to your institution, the better. The RMs are handy. We are committed 100% to working with you to make sure that if there is any discrepancies in records that have been processed with feedback given to you. We want to resolve it as quickly as possible. The next question with regards to how can we process electronically to minimize the flow of sending schedules across different channels. I mentioned something earlier when I was talking about payment without schedules, about encouraging us to adopt the use of the collection platforms. So there's one employee pension contribution collection system, EPCOS. It's a platform provided by NIBS, other platforms as well. It offers you that one-stop platform where you can make payments and provide schedule at the same time. And that way, you don't have to be saying you want to print a schedule, give to the custodian, or you want to send via email, because right on that platform, the PFAs and the custodians also have a viewing hand to pick up those transactions and treat them as quickly as possible. So I would encourage that we do that. Their website also NIBS offers the EPCOS. I know there are other platforms like Remita. On their website, there is a self video tutorial that offers tutorial on how these platforms can be used and how you can be onboarded to start using them as an employer. Of course, if there is still further need for us to partner with you in during this onboarding, of course, please reach out to your RM and would work with you to make that seamless. Right now, the template for the contribution schedule is also on display. Just as I mentioned earlier, the names have to be properly presented. The RSA PIN is important. It's 15-character length across the industry. The completion of that is very important to avoid any inaccurate data. The employee portion of the contribution, which is 8%, employer portion, which is 10%. If there is any VC, such should also be presented in the appropriate section. And the total must correspond with the payment that has been made at the end of the day. The period should also be indicated, because for every remittance, it must come with a certain period. And that is what will be used to effect the upload. For active contributors, the regulation requires that before you can make voluntary contribution, you must have a mandatory contribution. So instances where schedules will be sent and the only thing captured on the schedule is voluntary contribution for active contributors, that would be an anomaly. A corresponding mandatory is expected to be provided on the schedule, while you also capture the voluntary contribution part. So these are the basic information that we need. And if this data is clean enough, at every point in time, remittances will not have any issues. I saw a question that was speaking about 3 names. I provided 3 names where remittance is made with 2 names. Does that constitute a mismatch? That is not a mismatch. If you have 3 names and when remittance is sent, maybe your first name and your surname is captured, that is fine. That is not a mismatch. The times where we have name mismatches where there is contradiction. So you are saying John Smith here, and then when remittance comes, we are seeing John Ayola. That is a contradiction, so that is a mismatch. But if you have John Smith Ayola, and then when remittance is made, you are using John Smith, that does not constitute a mismatch. So I hope I've answered the questions. Umi.
Thank you very much, Tola, for answering those very burning questions. Because we always get that question coming up, that how come I've not been credited? I've not received my alert. I've not received my alert. I've not received my alert. And they've told me that they paid Stanbic. So I hope that Tola has answered those questions. It is very important that the right data is provided, because if that data is correct, then it's a straight through seamless process. But if there are issues with the data, whether it's an incorrect PIN, the name is not properly captured, there are spelling or typo errors, the summations are not the same. Antola, please, I hope I've covered most of some of the issues that come up whenever schedules are either hanging or not being credited because of these issues that are inherent in that schedule. So it's really for us to just be a bit more.
Thank you, Bumi. Thank you for that. And just to wrap it together, the essence of this is for us to see how we can make sure that when we do remittances, it goes through successfully. Now, that may not be 100% of the time. So instances where we have issues or we have fallout, I think the plea is also just to ensure that we act swiftly. It's important that that happens when feedback is given that, oh, there are certain discrepancies that we've observed that we need to resolve, the response time should be better because it also helps. No money will be sitting idle anywhere if we're able to ensure that we work together to resolve quickly. So ultimately, we want everything to go in at once, immediately, but where there are any feedback that has to be resolved, let's work together to make sure that that is dealt quickly. Thank you.
Fantastic. Thank you very much, Tola, for answering those questions. And you heard Tola directly that it's important we tell our staff that anytime pension contributions are made to the custodian and they are not being credited within sort of a 24 to 48-hour period, that it's important they check their pension statements, they go through either the mobile app or online to see whether they've been credited or not. And then if they haven't been credited, they should approach the PFA and ask questions, because your pension account, it is like your bank account. It collects money. So it's important that those monies are collected as and when due. Thank you so much, Tola. Now I'm going to call on Peace again to answer this question, because this really speaks to another important part of the benefits payment process. And the question is, please, can a legal beneficiary process the deceased benefits at any of your branches without going to the branch he registered? If not, why? And whilst before you answer that question, the other one is speaking to updating their next of kin, that they want to change it. How do they go about updating their personal details, their next of kin, and any other information that they have resident with their PFA? So, Peace, are you there?
Yes, Bumi, I'm here, and I got the two questions. I got that correctly, and I must say that one of the things that makes us stand out, let me put it that way, is convenience. And we always encourage that people don't have to travel far just to be able to receive service. Now, the disease benefit application is one that is very critical, and we know it's something that is very solemn. So we won't even advise that people have to travel long journeys just to be able to put the documents together. So any of our Stanbic IBTC branch outlets, the applications can be put in. But one of the things that is very critical is that all of the beneficiaries have to be physically present for identification and verification. But it can be done at any of our branch outlets, be it pension, be it bank. We have dedicated officers that will be able to provide that service of carrying out the physical verification and the review of the documents. And with respect to updating information, anyone that has the mobile app downloaded is able to perform some simple updates relating to phone numbers, next of kin details. You can actually do that on mobile app platform. And then if there are any options, if you're not able to carry out those updates that you would desire on the platforms, you can actually send us an email to pensionsolution@stanbicibtc.com, or visit our nearest branch. We would always prioritize convenience. So any of our branches, please just do visit, fill out the forms, and the information will be updated. But what is critical to note is that information such as date of birth, and names that are critically sensitive, we would always advise that please review the checklist so that you have all of the supporting documents handy before you set out to visit any branch. Or for preferably you can submit those requests via our pension solution email box if you're not able to do it on the secure web or on the mobile app. Over to you, Bumi.
Thank you once again, Peace, for answering that question. We are slowly but surely approaching the end of today's session, the Employer Forum for 2023. Can you believe it? 1.5 hours has flown by. just, I mean, it felt like 5 minutes ago when we were hearing the opening remarks from our chief executive. But we are slowly getting to the end of today's session. So many questions have come through. Thank you so much. We really appreciate the questions, and we hope that you have gotten satisfactory answers. Please still keep them coming. We will be answering any other question that we have not spoken to yet, even after the session. So please don't run away yet. We will answer them in the chat room. So very quickly, I would just want to answer one or two questions before I call on our executive director with the closing remarks for today's session. And the question is, it says, please, Kenneth, kindly clarify, can I withdraw this 50% deposited for more than 2 years if I am still in active employment? Okay, so yes, accessing your voluntary contribution is not a function of whether you are active or whether you are not active. So if you're active and you're making contributions, the answer is yes. You can withdraw from your voluntary contribution account once you meet the eligibility criteria, which is that it must have stayed there for a minimum of 2 years and above. And whatever has been calculated that you are eligible to take, you can apply for it. The appropriate tax will also be applied. So please remember that it's only if the money has been there for 5 years and above that there is no tax implication, i.e., that is when you will enjoy the tax benefit. But if it is between 2 and 5 years, you will pay the relevant taxes that apply on that voluntary contribution, the 50% that you can take. So I hope that answers your question. Wow. I cannot say thank you enough. Your participation has been wonderful. The questions tells us that you are listening actively, and not to worry. We will package today's session, and we will compress it and put them in a format where we will share with our employers so that they will have the material. And we are always open to come and speak to your staff. Please feel free to get in touch with your business development managers or your relationship managers, wherever you are in your locations, and book an appointment, and we'll be glad to come and have a one-on-one with your staff and share these informations about the updates, things that are happening, how they can access their benefits, and all the other things we've spoken about today. So at this point, I am going to call on our Executive Director of Business Development, Nike Bajomo, to give us the closing remarks as we bring today's session to a close. Nike, over to you.
Thank you, Olubunmi, and thank you to our distinguished guests. I think it's been an awesome session and a refresher for me as well. So I will say good afternoon. We're already 12:07. Good afternoon, everyone, and thank you once again for taking out time to be part of our virtual employer forum. I believe we have all had a very rewarding morning. I'm confident that the session was informative and you got some nuggets on how to support your colleagues who are our clients on their individual journeys to retire well. On behalf of the board, management, and staff of Stanbic IBTC Pension Managers Limited, we thank each and every one of you very much for honoring our invitation. Your passion, demonstrated by the quality of questions and comments that came through, assured us that we are definitely on the right track with the right partners. We trust that you will honor us again whenever we call. Once again, thank you very much for your time. Do enjoy the rest of the day. Over to you, Lubu.
Thank you so much, Nike, for your closing remarks. I'm sure that our lovely clients and employers will agree with what you have said, that this session has been valuable and we have shared very useful tips, nuggets, and advice, practical things that they can do to make their pension journey a smooth and pleasant one. And like we always say at Stanbic IBTC, we want you to retire well. That is our mantra, and that is why we are here. We are here to serve you and to say thank you for all that you have done. And for any who is contemplating that, oh, should I move my pension to Stanbic IBTC? We would like to strongly encourage you. Please make that move today. You will not regret it. As after all, we are the best at what we do. So please keep the questions coming. We'll still keep answering them in the Q&A section, even after now. We'll keep posting the replies. And like I said, we'll also post a link and send you material subsequently, or if you would like a customized session with your employees, we are more than happy to do that. Just reach out to us via our various channels or through your business development managers who you relate with on a regular basis, and we can schedule a visit to your employer spaces, whether physically or if you prefer a virtual session because people are in different geographic locations. We are happy to oblige you as well. So once again, it is to say thank you very much for joining us for today's Employer Forum 2023 as we bring it to a formal close. Do have a wonderful rest of the day ahead. And yes, please be safe. Goodbye and God bless.
Set I want. Stanbic IBTC gang. Set I want. Okay, happen to life gang. Set I want. Set I want your pension of Lagos. You know me, who gang? You are moving to the switch gang. It can be with the switch gang. Right now you are moving to the switch gang. This gang is the switch gang. Switch now, make you check calm. Your pension go sure, make I no lie. Cut and pick IBTC if you want try. Transfer with the short, so no door. How you go come no if you no try? No confirm account with the no sign. Pension manager we go show you die. Set I want gang. Retire well gang. Pension secure gang. Just switch gang. Set I want Stanbic IBTC gang. Transfer window gang. Happen to life gang. One pension manager gang. Join the switch gang today.
Stanbic IBTC Pension Managers, a member of Standard Bank Group.
Sorry, wait, excuse me, sir. I'm looking for number 2 Johnson Street.
Oh, Johnson Street.
Yes.
That's quite simple.
Okay.
Now you just go straight on longitude 155, longitude 155. Now take a 360-degree turn and turn left. Then turn right on latitude 379. Are you following? Face the south. Face the south and transverse the trajectory. At that point, you would notice a newly old turning. Take the sharp turn, and at that turn at angle 90, and boom, you are in Johnson Street. You can't miss it.
At Stanbic IBTC Pension Managers, we believe the journey ahead should be simple. Let our experienced managers support you. Switch to Stanbic IBTC Pension Managers today. Stanbic IBTC Pension Managers, a member of Standard Bank Group.
Set I want. Stanbic IBTC gang. Set I want. Okay, happen to life gang. Set I want. Set I want your pension of Lagos. You know me, who gang? You are moving to the switch gang. It can be with the switch gang. Right now you are moving to the switch gang. This gang is the switch gang. Switch now, make you check calm. Your pension go sure, make I no lie. Cut and pick IBTC if you want try. Transfer with the short, so no door. How you go come no if you no try? No confirm account with the no sign. Pension manager we go show you die. Set I want gang. Retire well gang. Pension secure gang. Just switch gang. Set I want Stanbic IBTC gang. Transfer window gang. Happen to life gang. One pension manager gang. Join the switch gang today.
Stanbic IBTC Pension Managers, a member of Standard Bank Group.
Sorry, wait, excuse me, sir. I'm looking for number 2 Johnson Street.
Oh, Johnson Street.
Yes.
That's quite.
Set I want. Stanbic IBTC gang. Set I want. Okay, happen to life gang. Set I want. Set I want your pension of Lagos. You know me, who gang? You are moving to the switch gang. It can be with the switch gang. Right now you are moving to the switch gang. This gang is the switch gang. Switch now, make you check calm. Your pension go sure, make I no lie. Cut and pick IBTC if you want try. Transfer with the short, so no door. How you go come no if you no try? No confirm account with the no sign. Pension manager we go show you die. Set I want gang. Retire well gang. Pension secure gang. Just switch gang. Set I want Stanbic IBTC gang. Transfer window gang. Happen to life gang. One pension manager gang. Join the switch gang today.
Stanbic IBTC Pension Managers, a member of Standard Bank Group.
Sorry, wait, excuse me, sir.